Good evening. Welcome to Option Center's Wednesday evening. Welcome, everybody. Thanks for joining us here. If you are new, go down to that bottom right-hand corner, hit that Option Center logo, and subscribe. We had quite the day in the market today. Price is pushing up higher than expected, but like I said in the last couple of videos, it's setting us up for a much more bearish move. Okay, we're in this situation where the bulls are celebrating and they're looking for a new high here. Okay, we're gonna go through. Let me start over. I'm just jumping right into it. So we have SPY. We're gonna go through SPY on the weekly, daily, and 65, and then we're gonna head over to the Elliott wave. But we're gonna look at some of our indicators on the daily and the 65 to see what might happen next. I do think we push just a little bit higher. So stick around for those indicators. Then we had to adjust by 1 degree. We had to adjust our Elliott wave count so it fit a little bit better into CPI. Now, with that said, CPI is a catalyst. We don't know how the market's going to take whatever number. I don't care what the numbers are. It's how the market wants to interpret it. So the market's bearish, we go down. Market's bullish, we go up. And we'll explore both of those situations. But I do think on how the structure is set up that we go just a little bit higher. Okay, so we have SPY on this weekly time frame. I'm not going to talk about the bullish case until we have a setup for the bulls. This is a longer term weekly setup. We have a 3-wave move down so far. So bulls are celebrating. We have a reversal. They're looking for new highs. In the meantime, if we get over this high right here, that's 453.67. We get over that high, that is bullish. No matter what happens, if we get over there, that negates a 1-2-1-2 setup, which I think we're getting into a 1-2, and then a 1-2 setup that's very bearish. If we get above this high right here, then that negates that. Even if we have this just the larger A, B that comes above it, and then C, even it doesn't mean we can't go down. It just negates that this is 2 impulse waves and that we go much lower. Okay, so we're looking specifically for that high. Now, anything else on this time frame? Now we're into the 8 EMA, so naturally we paused here. That's our trending indicator for the weekly time frame, for all time frames actually, and we're right into it. If things go the way I think they're going to go into CPI, this 20, I'm highlighting this 20 simple moving average, and you can see on the right here that it's at that 440.17. Keep an eye on that number. 440 is going to be very important. So it's a zone. 440, 441 zone is going to be kind of where we're looking to put or add on to more shorts. Okay, we start getting above that, and in our situation is starting to get more bullish. Okay, let's go down to the daily time frame. And one of our members mentioned that some of my videos are glitchy, and I apologize. I will be setting up I'm setting up my office, so I'm going to be setting up a whole new system with new internet, new computer, all sorts of stuff in order to have a nice, crisp, clean video. But in the meantime, hopefully my voice isn't glitchy. So we're on this daily time frame on the SPY. And by the way, if you want to help us out, please hit that like button. At very minimum, hit the like button. Feel free to comment. I do try to check my comments often, and there's other ways in the description below that could help out. So we have on the daily time frame, We got just above that 200-day moving average. We have our neckline, and you could draw it a couple different ways. We have our neckline from the head and shoulders pattern that we're testing. Again, right at that 50 simple moving average. That's right where that 440, right where that, it doesn't mean that we're going to get to it. Okay. But that's where, if we exceed to yesterday's high with the CPI in the morning, maybe we gap up strong. Maybe we gap into this 440 area. Either way, if we get into this 440 area, that's our next objective short. That happens to be a resistance / support because we have a triangle here, and it's right in the middle of the triangle. So that would be a good area that I'm looking at. It's also 50 simple moving average. And again, we're testing this neckline, and we're not quite filling the gap yet. So maybe we fill that gap, and CPI could do anything. If we just turn down from here, fine. We're already in puts. It's fine. We are back in this consolidation area. So it's very choppy. It's very difficult to get through here. We did break through a few resistances. So the market's pretty strong right here. Let's look at the Williams percent. Williams percent just kind of oscillating in that overbought territory. If we do get a new high, I'm going to be looking for a bearish divergence. See if that matches up with the RSI. Okay, we'll compare those two. With some of these indicators, we have our MACD crossing on the daily time frame. We're still in a downtrend, but we have to respect the fact that we're crossing here, which means we could probably go to new highs. It's very possible. We'll know that on the pullback, and we'll talk about that when that occurs. Right now, we're trying to catch this reversal. We are in overbought territory on the RSI. We are getting an early cross, an early indicator that this move might be getting, close to being done. But we need to cross underneath this 80 line here for a sell signal, just like this point right here, for example. Okay, we had our buy signal early on, and we respected that because we had positive divergence. We caught that move. Now we're getting to the overbought territory once again, but we're just now getting into it. So we still need some time, maybe a day or two, before we start to curl, unless we have large moves into tomorrow, maybe a large move down. We have to take it day by day, but right now we're just getting into that oversold area, and then we have to come back down for the sell signal. So we don't have a sell signal yet. And we talked about that yesterday. As a matter of fact, on the 65-minute, we'll check it out a little bit more, and we'll kind of talk about, we didn't have our sell indicators, and we should have known that, but we did get our pullback, and hopefully some people got to take some profit out of it. I'm going to take some heat, but I know that my SPY play is not doing so well. Nvidia kind of snapped back on me, but we'll see. We're still looking for this turn. We have plenty of powder left for when we do catch the trend. So right now we want to make sure that we get in the right side or readjust. Use our futures. Right here we have our ADX. So the ADX is starting to head down because we're counter trending right now. We're counter trending, so the ADX is going down. We're looking for a higher low where we continue to trend to the upside, which means price action starts heading back lower. Okay, on the MACD, yes, we're getting our cross, but we're still in the downtrend. We're still in the bearish territory. So this could be a whipsaw, very similar to this, to where we had lower. And then we start maybe getting some divergences later on to where we can look for a new buy. This, let's see here. Let's go ahead and go to the 65 minute. Let's go to 65 minutes so we can see if we can learn something new on a lower time frame here. Now we do have our wedge action that we're here, and I adjusted it a little bit. I know that this didn't make a new high yet, but I'm anticipating a new high. So I put the trend line underneath this possible wave 4. Okay. So we do have a wedge here. We're looking at a little bit of resistance around the 438 zone. That's the 200 simple moving average for this period, for the 65-minute period. But again, there's our 440 area, 441, right around here. So that is a resistance zone. That would be, that would mean that we had to pop above this wedge, which is called an overthrow. It's not uncommon. And then we break back into it. The main part is not this upper trend line. Okay? The main part is this trend line. That will be important to break. Now we broke the fast moving line. We broke that already. And so we may have had a minor sell signal, but price held. And it's very important to look at this. This is a 3-wave move. We have an A, B, C 3-wave move. So that's one clue to tell me that we're going to at least eke out a new high plus more. All right. So we close this gap here. Get rid of that. Let's look at some of we have the Williams percent R on the 65-minute. With this ABC correction, we got all the way back to the oversold area. That's another clue saying that was just a pullback, and we're going to make another high, and we're not oversold yet. So we have further that we could go. Okay, there's another clue. We'll bring the other indicators back on. The MACD. The MACD is important. We didn't make a new high here yet, but we're getting this bearish cross. Now, if we make a new high, we're probably going to get some bearish divergence. That's what we're looking for next. We had all the oversold or overbought conditions that gave us the pullback we were looking for, but we certainly did not get the big move we were looking for. We had a 3-wave corrective move. And now we're starting to move back higher. So we're looking for some negative divergences. We get a negative divergence here, and I'll put a red arrow here for another sell signal. So we have our initial, then we'll look for negative divergence here. And you see we're just now getting a buy signal on the Stochc RSI. So that tells us this is probably going to get all the way back up to this oversold area, and that means price action is going to lead it. So we have our sell signal here, and again, we'll probably touch back up to the oversold or overbought conditions and have divergence as price makes a new high. So those are the things I'm anticipating. It would be in our best interest if we gap up, if we had a huge gap up into the 440, 441 area. We would press our shorts going into next week and look for a reversal at that point. And I'll show you on this next, on the Elliott wave, why that is. So we are also, we're in this comfortable territory of the options expected move. The yellow line represents the options expected move. And we closed right on it. So it's a very important area. We utilize the options expected move every single week. So on the weekend, I'll adjust all of our expected moves, and it's a standard deviation move that we would hit either end of the options expected move. This time we hit the top. It is very unusual to hit both. It can happen in high volatility. So it's not likely that we're going to reverse tomorrow or into Friday, especially if we go higher, and reverse all the way into the expected move. It is an idea that we could come all the way down to 430. That's where we closed the week before, so that acts as a level as well. But yeah, so we're already up here at the options expected move. So if you have any plays that are way down here, you might as well take your loss on them. It's just highly unlikely, unless they're put protection. That's different. Okay, let's go over to. By the way, I do have a video for options expected move if you want to use those yourself. I'll post that up top or at the end of this video. And for our Elliott wave count, I had some minor changes here. We're still looking at this whole move being a 1-2, 1-2, okay? Being a bear, we have a 1-2, 1-2. It's negated way above here. I know that's a lot of space there. So right now we're looking basically just at this next leg here and then a retracement. So our retracement from the top of here to the bottom of here, I had it right here because we were using this as an expanded flat. This expanded flat's not really, it's just not fitting well. So we adjusted this to where it's a 1, 2, 3, 4, 5 wave move down. And again, the bulls are looking as A, B, C, with that 5 wave move down being the C. It fits. It looks nice. So you can imagine that's why we're getting so many buyers. So with this being done, a 1, 2, 1, 2, and now we're looking for a retracement. Now I relabeled this as an A, that deep B, and we're looking for wave C, which is an impulse 5 wave move. So now, if I dig in here just a little bit more, get a little closer, we're looking at this being wave 1, 2, 3, 4. This was a beautiful, and the reason when I changed this pattern came right into this old 382. Well, if you take wave 3, the bottom of wave 3, we add our retracement tool on here to the top of wave 3. Wave 4, it's very typical to retrace into that 382. It came right into the 382. And so that's the point when I just, I started to label this a little bit different. And I started to see, as right at the end of the day, price started to surge up. That's when I started realizing that, hey, this is probably not done. It can be, if something else is, the market never makes it easy. So somehow you get 5 wave move down in here, 5 waves. Sure, then it can reverse. But as of right now, I think this fits a lot better. This being an A, B, we completed 1, 2, 3 is not as long as 1. So 4, and then 5 is going to be shorter than wave 3, because wave 3 cannot be the shortest wave. And, that allows us plenty of room. So I do suspect that this opens up the trade up to 440, 441 area. See why that's so important? That's a 62% retracement. That's a perfect scenario for a wave 2. Whether you consider this if you get 5 waves in here, then this is a zigzag. 535. And that's exactly what zigzags are, usually in wave 2, up to the 62% retracement. So this would be very typical. So I imagine that the CPI is going to be bullish. It's just a guess. I don't know it. And if so, we start getting above 437, the highs that we had previously, and we're going to head to 441. That 440 spike through and probably get our reversal at that point. That's when we'll start adding on some new shorts. Okay. Hope that all makes sense. I will show you QQQ and how we change the count on that one too to kind of fit the same scenario that we're trying to figure out now. I do think Tesla's done. I don't think Tesla goes much higher if it does, because then it would start breaking out and we have a whole new realm. Then I think we'd start turning a little bit more bullish in the back of our minds. And this one, we're going to do the same thing. We're going to open this up just a little bit because I think we're going to get a higher position. Now, we do have a downtrend line, a minor downtrend line here. It's not even considered a downtrend at this point. Really, it's just a pivot. This would be more of a downtrend. And so I don't think we'll stop at this point. We have the options expected move, so that will be a nice little fun place. It can. We're going to make a new high above it. That can be it. Perhaps NASDAQ is done here and IWM continues to push much, much higher, faster, and props the market up while NASDAQ is done here. I don't think so. Let's go to the Elliott wave count. I think we go a little bit higher. I think we have some places up here, maybe 374. Let's see what that is on the Elliott wave. Aha! 374. That's our 786 retrace. And it coincides with the downtrend line. I think that's our target. That's going to be our next objective short for QQQ as well. It's very specific. So here's how we had this as AB. We had this as AB before. So nothing's changed in there, but for our 1, 2, and then wave 3 is already completed. So that wave 3 is a 1, 2, 3, 4, and just a little 5 right there to complete wave 3. Came down for wave 4. And now we're looking for the next move for wave 5. And this line, what is this? All this is the measurement of wave 1. And a lot of times when you have the extension in 3, wave 1 is pretty typical to equal or be very similar to wave 5. So that takes us right into that 786, 374 zone. That downtrend, a lot of confluence here. So that's what we're looking at. That's very specific. You see the oscillators, they need some divergence. My hope is the best case scenario is that we gap right into some of these resistances. Everybody gets bulled up. You get a lot of bulls that jump in. We sell some of our hedges, reverse them around, and go ahead and get our intraday reversal. That would be the best case scenario. Otherwise, if CPI doesn't do a whole bunch, maybe we have a little gap up and we just kind of grind up into it, and maybe we have a reversal tomorrow. I'm just putting out scenarios. Maybe we gap down a slight bit, where this is just a miniature wave 1, and we gap down a little bit, and that would give us a buying opportunity to go to the rest of the 5 waves into our next zone. All right, I hope that helps out. Again, let's SPY. If this is a 1-2-1-2 setup on a bearish stance, we pretty much have our last stand for this scenario. All our other options are closing out because that 786 is that downtrend line for that major 3-wave move down. We get above that and we can start saying goodbye to the bearish scenario. I think we're going to new highs. So that with a push up to here into the 440, 441 area, that should be equivalent to QQQ going to 786. That should be our key to our reversal because we exhausted every other situation. We're going to have bearish divergence. So then after if we show signs of reversal, I'll start to talk about in the future videos, now what are we looking for? Because the bulls will have an opportunity again. Okay, but until then, maybe, hopefully, tomorrow CPI will just rip us up here. And then we'll have an objective short a lot sooner than later. All right. Thanks for joining us. Don't forget to like the video. We will talk to you tomorrow.